Hello and welcome to the marketplace. Here we analyze the market. We talk about your trends and investment and how global development is also impacting on business activities here in Ghana and other countries on the continent. Another program today, Ghana's per capita income increased by almost 6%. We look at the implications of this on economic development here in Ghana. And also Standard Chartered Bank say it is on the path to recovery after recording one of its worst financial performances in 2015. All these and more we'll be looking at in detail here on the marketplace. And finally, President John Mahama has once again justified private sector participation in the operations of the electricity company of Ghana. So these and more we are looking at here on the marketplace. So you can get interactive with us if you want to. Our handle, if you want to tweet, is Joy Business GH, and on Facebook is Joy Business. For more, you can log on to myjoyonline.com/business. My name is John Kojo Amwako. I'll be back with more after the break. You're welcome back. Ghana's per capita income, the index that measures the average income earned by each citizen, has increased by almost 6% since 2008. That's according to the latest figures from the IMF, World Bank, and the World Economic Outlook report. It is pegged at $1,340 at the end of 2015 compared to $2,266 in 2008. But exactly what does this mean for the economy? Details in this Business Desk report.
Per capita income is used as a means of evaluating the living conditions and quality of life of a population in a specific year. It is determined by dividing the area's annual total income by its total population. For a country like Ghana, the per capita of $1,340, which is in the year 2015, therefore means each Ghanaian is expected to have earned that much if the country's GDP in monetary terms was shared among the population. This is higher than Cote d'Ivoire's $1,315, Senegal's $913, and Kenya's $1,338. In a recent UNDP Human Development Report in 2015, Ghana was also placed in the medium human development category with a score of 57.9%. The composite index was also higher than Nigeria's 51.4% and Cote d'Ivoire's 46.2%, among other countries that were all co-signed to the low human development category by their respective scores. This puts Ghana ahead of all its West African neighbors, except Cape Verde.
And that was a Business Desk report. Now let's find some perspective to this particular report and see how feasible and what it is that actually what's contained in there and what is the way forward here. Is it sustainable? And we do have Dr. John Gachi on the line from the University of, a lecturer at the University of Cape Coast on the line to actually help us do this. Dr. Gachi, you're welcome to the marketplace.
Thank you.
Exactly what does this make? What do you make of these reports that Ghana's per capita actually been improved or increased on top of Ivory Coast, Senegal, and other top-notch economies on the continent?
Well, I think economics throughout the world use per capita income as a measure of the well-being of citizens. But we normally have to be very careful when we are using the per capita income, because all of us do not contribute to the GDP that we use to compute the per capita income equally. We need to also be very careful as to what constitutes our GDP. If the GDP improvement is emanating from sectors that do not actually affect the life of the ordinary person, that becomes problematic. But you will realize in the case of Ghana, most of the items that were actually talked about in the report have to do with investment in key areas that affect the life of people. That is why the
Hello, Doc. Are you there? Okay, unfortunately, we've lost Dr. John Gachi there from the University of Cape Coast, or a lecturer from the University of Cape Coast. When you're actually able to touch base with him, we'll bring him back on the line. And also, we do have that. So we'll be looking at that in detail here on the marketplace. And moving on here on the marketplace, Standard Chartered Bank said it is on the path of recovery after recording one of its worst financial performance in 2015. The bank last year saw its profit go down by more than 100% due to the inability of some funds borrowed to be paid on time. But speaking to Joy Business or the media after its annual general meeting, the chief executive, Kweku Bediado, noted that the first quarter numbers that shows that things are picking up and they'll get back to the winning ways.
The economic conditions for 2014, 2015 have been quite formidable. The 3 years of an energy crisis clearly is enough to bring any business on its knees. The currency volatility that we experienced for successive years also played a part. The slow growth, which is a reflection of an understandable front-loaded fiscal adjustment program under the IMF ISAF. All these things would create a certain business environment. And as we keep stressing, that business environment was disruptive to the working capital cycle of our clients. And that is what would lead to impairments, loan impairments anywhere in the world. It does not mean that these clients have dropped off a cliff. It just means they've gone through or are going through some challenges and need a bit of time and breathing room to restructure and get back on track. So that's really the story that we've been trying to get across all day. It's still a year that we will remain cautious about. Cautious in terms of being selective about asset growth, managing our balance sheet optimally, and pursuing a dual strategy of organic growth and recovery and restructuring of impaired assets. I said our organic performance or our organic growth will be cautious at best. It will be cautious, tied closely to the economic indicators, which we are monitoring very closely. But we will complement that with our recovery and restructuring. That's why I keep saying that we have a two-pronged approach. Cautious organic growth, restructuring and recovery strategy of our impaired assets, so that at the end of the day, both will feature in our performance at the end of the year. So that's how we'll go.
Meanwhile, board chairman of the bank, Ishmael Amsense, says the bank is adapting to current challenges in order to improve its fortunes. Standard last year saw its profit decline by more than 100% to about 66 million Ghana cedi. This was basically due to the inability of loans given to some businesses in the energy sector to be paid back on time.
It changed the business cycle of many businesses. I mean, take the energy sector, where the government simply said, we won't pay until we have validated what you say we owe you. Now, if that business owes a bank, that bank will also not be paid. It isn't that business is a bad business. But what has happened, which nobody foresaw, has created that problem. But we believe that, and I made reference, and the CEO made reference to the IMF program, which is guiding Ghana's monetary and fiscal policy and the whole management of the economy. We believe that if Ghana stays on course, then there's no reason why we should not, have confidence. We can only trust that the program would be implemented the way the government has said is going to implement. The world is changing very fast, and we cannot pretend that we will continue to do things the same way, even as the world is changing around us. I always say, it's just like you being on the dancing floor, dancing cha-cha-cha-cha, and then the music changes to high life, and I say dancing cha-cha-cha-cha. You are getting in everybody's way. We must learn to change as the world changes. And the world is moving away from branches. It's as simple as that. We take a decision as a bank, where as the retail business director said, we know where the business is going. We know where our customers are. We know the culture of our customers, how they are changing. And we have to follow them. We cannot say that because 20, 30, 40 years we had a branch here, we must still have a branch here, even when there is no business.
So as the world dance cha-cha-cha, we also would want to have actually cha-cha-cha, the dance there, by giving you exactly what you want. And we're actually going to get touch base with Dr. Gachi again, who is a lecturer at the University of Ghana. As our earlier story indicated, we're looking at the GDP per capita, which measures the average performance of the country to do with the individual members of a particular country. Doctor, you're welcome to the marketplace again. Hello, Dr. Gachi. If you can hear me, you're welcome back.
Thank you.
Exactly. You're making a point before the line dropped. Can you continue from there?
Yeah, my point basically is that per capita income is used to measure the well-being of people. If it is improving, that is good news. But we need to go beyond the improvement in per capita income to try to assess where the expansion in the GDP that is causing the improvement in the per capita income is coming from. If it is actually located in very limited areas of the economy that do not very much affect the ordinary person, that is not good enough to talk about. But you will also realize that if you come to the case of Ghana, it seems to me that while in terms of sectoral growth, we still have growth coming greatly from the services sector and the mineral subsector. The areas of investment that actually contributed to growth were spread in the key areas that affect the ordinary people in terms of investment in health, education, and infrastructure.
Okay. All right, Doc, let's also look at this from this angle. How feasible or how possible is it? Let's look at the logic around it. Ivory Coast for the past 2 years has been growing better than Ghana. I'm talking GDP terms. Other ones also, I mean, for example, Senegal has been growing quite well. And recently, according to some report, now it's like South Africa has been overtaken by Egypt as the second largest economy in Africa. A lot of things are happening here on the continent. How is it possible for Ghana to overtake Ivory Coast, which has consistently seen a higher GDP growth?
Well, I think per capita income is all about your GDP, the size of your GDP divided by your population.
Exactly, yeah.
Yeah. Ivory Coast may be growing better than Ghana in terms of GDP terms. But that does not mean that when you divide the GDP per population, they should be doing better because we have different population dynamics, etc. If you go to South Africa, the problem they are facing is not the same as other problems of other countries. South Africa has suffered severe energy problem in the past 1.5 years. You know, the manufacturing setup of South Africa, the SME stand, all these things affect the ability of those entities to operate. Just like Ghana has also been hit by energy problems, which affected the productive level of the country. So different countries have their own problems that may dovetail into what measures come out in terms of this economic.
So you disagree with those analysts who are saying that the numbers aren't correct and therefore this figure must be relooked at?
No. The numbers cannot be questioned, especially coming from the institution from which they're coming from.
Okay.
You need to look at the situation of Ivory Coast in a very clear perspective. Ivory Coast just came out of some civil war. The world economies actually pledged to support Ivory Coast, and we can see clearly a clear support of that economy just after this thing, and that they are focused on that path, and that is the only reason why Ivory Coast is performing so much. But beyond that, I think that we need to focus on our economy, commit ourselves to the needs of our people. For comparison, different dynamics take place, they will continue to change.
Okay.
But we need to focus on what our people need most.
Exactly. That is leading me to my next question, which I think maybe if you can actually do that for me in about 30, 45 seconds, I'll be very grateful. Now, is it that necessary? Now, people are talking of actually not even using some of these benchmarks anymore, but rather use what they term as a Human Development Index. If I'm at home and I'm not happy, it doesn't matter what the GDP numbers are. It's not, I mean, it doesn't make sense to me. If I'm at home and I'm not employed, or my family is actually not getting access to education, then probably all this GDP per capita or that, excuse my language, it's not necessary for me. What's your take on that as well?
Well, I think using these measures have always been problematic because they are what we call average measures. And these average measures may not reflect the individual level assessment of benefits from the economy. And that is why policymakers and managers of the economy should do their best to target what is to the interest of individual households and certain sections of the economy so that they can benefit more from the economy. If you look at our GDP, it will mean that just very few people are contributing in terms of productive outcomes. So we need to ensure that we spread how we produce our GDP so that when we are coming up with some of these measures, it will actually reflect on the generality of the people of Ghana.
Okay. All right. We thank you very much, Dr. John Gachi, a lecturer from the University of Ghana, giving us some perspective as to what exactly it means and which areas we need to be cautious of in the event we want to rely massively on this particular benchmarks as being used by the World Bank and Ghana. Now, moving on here on the marketplace, President John Dramani Mahama has once again justified private sector participation in the operations of the Electricity Company of Ghana, arguing that it is a risk worth taking to fix what he describes as a very inefficient downstream power distribution sector. Workers of the electricity distributor have been in the news lately, voice of their objection to the transaction. Their protestation, however, come at a time many customers of ECG are unhappy with the quality of service delivery and what the Public Utilities Regulatory Commission says has been widespread overbilling of customers. Speaking at the opening of the African Mobile and ICT Expo in Accra, President Mahama likened the current charter against the private sector participation of ECG to what pertained in the period leading to the liberalization of the telecom space some years ago.
Change is something that many people are afraid of. At the time it was decided to deregulate, I remember P&T workers were against it. They went on strike. They said it was going to create job losses and so on and so forth. Today, the P&T is Ghana Telecom. I think Ghana Telecom employs more people than P&T ever employed. And if you add Tigo and all the other mobile companies and all the other data companies and everybody, I'm sure that the telecom and digital ICT industry employs hundreds more people than it ever did when we had just P&T. Ghana and South Africa were the first to begin the deregulation on this African continent. And change was not something people wanted to embrace. They said that telecoms was such a vital service that if you deregulated and let the private sector come in, the CIA could plant things and listen to conversations. And those were some of the chimeras that were, pulled out of the box because we were going to privatize, allow private participation. Today I can see a similar development. We have a very inefficient downstream distribution system on the electricity and power front. We're trying to do reforms. And those chimeras are being drawn out. Electricity is so important, that it must be monopolized by the state. Why are you allowing private sector in? But we've had this system for years. It's not working. If it's not working, you fix it. And you fix it by taking risks. It's a risk we took when we deregulated telecommunications. Nobody knew it would turn out like this. But look at us many years on. And so if you're not willing to take risks, then the world does not make progress. The world makes progress based on risks. And so would have to, prepare our minds for a change when it becomes necessary.
So risk-taking is the order of the day. Meanwhile, Deputy Power Minister John Jinapor has been briefing Parliament on issues concerning the prepaid energy meters. According to him, the introduction of the prepaid meters was to enable ECG provide quality services, allow customers manage the use of electricity, and also to avoid accumulation of bills.
Government strictly does not import prepayment meters. Normally, we would import post-payment meters as part of the SHARE projects that this House has approved under the 10 key projects. And so, strictly speaking, we do not import prepayment meters. But we thought that we should give you additional information about meters that ECG and NETCO is procured. And even with that, Mr. Speaker, with your permission once again, they do not import the meters directly. We have 5 local manufacturing companies, and so they procure from them from 2012. That is what we have been doing. So having said this, Mr. Speaker, with your permission, I'll proceed to conclude by saying that the introduction of prepaid energy meters was a means of enabling the utilities, namely ECG and NETCO, to collect revenues upfront in order to finance their operations and improve on their effort to provide quality services to customers. This was also intended to empower customers to manage the use of electricity by avoiding waste and also prevent the accumulation of unpaid bills. Following the government's approval, a larger project was scheduled to replace all credit meters with prepaid meters for all ministries, municipal.
John Abu Jinapor there. And Amsense is one of the biggest brands in the fashion industry here in Ghana. It is run by one of the country's celebrated creative entrepreneurs, Mabel Simpson. She will be riding along with us on the Joy Business Van, sharing her journey to success. Here's a preview of tonight's show, which will air on Business Live at 5 p.m.
Mabel, who studied communication design at the university, started Amsense at age 25. That was 2 years after school. She was working for a marketing company in Accra when the idea came to her. She started with 200 Ghana cedis and a sewing machine she got from her grandma.
The idea was one that even my parents didn't buy into. It was me working and wanting to stop and, start making accessories with the African print. And for me, I didn't know how, I didn't have a business plan or anything. But I remember when I was working, there was a colleague of mine, Jeff. I sold the idea to him, and I remember one thing he said to me was, Mabel, I don't believe in you, but I believe in your idea. Go and make it happen.
So Amsense there. Now you can actually catch them on Business Live at 5 p.m. exactly. That was something very you cannot actually miss. Now, time to do the market to look at how your investments are faring, especially on the equities market, the commodity and the currency market here in Ghana and across the continent. We'll be looking at that. Now, starting from Johannesburg's FTSE All-Share Index, recording 153.83 points on the upside as against the year-on-year performance of 4.31 in the positive. Nigeria's All-Share Index declined by 35.93 points as the year-on-year remained 3.64 in the positive. One of the key and the biggest economies in the continent, which is recording some positive returns for their investors on the equities market. Now look at Egypt's EGX30 index, which also improved by 76.39 points as the year-on-year is equally good at 9.04% per annum, and Morocco's all-share index declined by 32.45 as the year-on-year grew by 9.80 in the positive region, almost something similar to what Egypt and Nigeria are recording. Now let's look at the Nairobi all-share index, which also appreciated by 0.34 points, but the year-on-year still depreciating at 1.28% year-on-year. And moving on to Tunisia, which is declined by 3.89 as the year-on-year remains at the top of 10.02% in the positive regions, whilst Ghana, after declining 0.72 points, actually trending around 12.14% year-on-year in the negative. Now let's look at the Bourse Regional Development Mobilier. The composite index actually marking the Francophone countries' performance also grew by 0.03 points as the year-on-year, standing at 0.26 in the positive regions. Now let's look at finally Mauritius market, which also recorded an impressive performance after it recorded an appreciation of 1.40 points as the year-on-year remains 2.95 on the low and the downside. Now let's look at Ghana and how Ghana did contribute to the main market at a total volume of 55,145. The value of 27,158. That brought market capitalization down further from 54,226,057,000 to about 53,998.61 million Ghana cedis. Quite significant decline there. That brought also the composite index, or dropped the composite index by 5.04 as it currently stands at 12.39% year-on-year as against 12.14. So the composite index keeps declining as the financial services index moves also from 14.64 to 15.02% year-on-year. So that's how the Ghana market is performing currently. Not that impressive performance there, but let's look at those equities which actually did make some impression on the Ghanaian market. Topping the chart is Ecobank Ghana, which recorded a return of 3 Ghana cedis to its investors as the market opened today at 6 Ghana cedis 33 pesos. Aluex, followed by Aluex, which returned 1 peso to its investors after that yesterday's trading, and currently trading at 10 pesos per share. That was also followed by ETL, that's Ecobank Transnational Incorporated, the parent company of Ecobank Ghana, which lost 1 peso to their investors and currently trading at 18 pesos per share. Then finally, HFC Bank also lost 2 pesos to be trading currently at 83 pesos per share. Now let's move on to Nigeria and how it also did contribute to the market. Total topped the chart with those returning positive to their investors with 2 naira 82 kobos, as Guinness followed with 95 kobos, Wando next with 62, Diamond Bank with 6, and also Unity Bank with also 4 kobos respectively. Now let's look at those top 5 losers on the Nigerian market, and we do have Livestock, AfriPrudential, Transcorp, Tiger Brand, and Skybank all losing 1 kobo, 2 kobo, 3 kobos, and 4 kobos respectively on the Nigerian stock exchange. Now moving on to the commodity market, which currently is seeing crude oil recording $52.24 per barrel. As of yesterday, by the close of the market yesterday, it was 51. Currently, it is trading $52.24 per barrel after it gained almost about 80 cents per barrel. Now, gold also gained $13.10 to be trading currently at $1,257 per ounce, as cocoa gained $31 to be trading around $3,104 per ton. So that's exactly what it is. So all the 3 commodities that Ghana has some interest in, there performing very, very well there on the international market. Let's look at how finally the Ghana cedi is faring against the top 4 or 5 major trading currencies. Against the US dollar, the cedi lost and is currently trading as 3 Ghana cedis 85 pesos. And against the British pound, is also lost, but currently trading 5 Ghana cedis 61 pesos. And the euro also did gain marginally against the cedi, also trading 4 Ghana cedis 38 pesos. But the cedi gained against the Chinese yuan, which is now costing 58 pesos, and also against the CFA franc. So 149 CFA franc will get you 1 Ghana cedi. That's how the cedi is faring against the top 5 major trading currencies here in Ghana and across the continent as well. So that'll be it for the market here in Ghana and across the continent, and that will also be it here on the marketplace. My name is John Kojo Amoako. For your feedback, you can join us at Joy Business GH if you want to actually get us by Twitter and all, and also on Facebook it is Joy Business. For more, you can log on to myjoyonline.com/business. Have a good day.